I'll go ahead and get started with my introductory comments. I'll post them on chat as well. So if anyone joins here a minute or two late, I'll be available to look at. Thank you for joining us for the Future of the Enterprise Post-Pandemic, sponsored by March Capital and Macquarie. At March Capital, we are witnessing and our portfolio companies are benefiting from a rapid acceleration of digital transformation. The acceleration of the deployment and utilization of cloud-based software and IT infrastructure represents a once-in-a-generation opportunity for investors, as years of change are being accelerated into months. It's estimated that over $7 trillion will be invested in the next several years in digital transformation. In 2010, there were 14 public cloud companies valued in aggregate at $30 billion. In 2020, there are over 70 public cloud companies valued at over $1.2 trillion, including our largest investment, CrowdStrike. And this number will likely double the next 5 years as a new generation of companies grow up and go public. It can be argued that many of the most interesting companies are currently private. And we believe that during this massive digital transformation, which has already kicked off, cloud-based software and IT infrastructure will be the most dynamic and rewarding sector to invest. In a series of sessions starting today, we'll begin to explore the emerging technology landscape and highlight breakout companies. Today, we have guests from North America, South America, Europe, and MENA joining this call. Many of our guests are from the Montgomery Summit community. We welcome you, and we'll be accepting questions later in the session from the chat function on Zoom. Now I'd like to introduce my co-host today, Sarah Hindlian-Bowler, and our guest. Sarah is a senior analyst from Macquarie and a recent author of Life in the Time of COVID-19, The Future of Work and Life Post-Pandemic. With over 20 years of industry and Wall Street experience, she's a highly regarded analyst. Sarah will summarize the findings of the recent report before leading a conversation on the rapidly changing technology market. Umesh Sachdev, co-founder and CEO of Uniphore, and Uniphore is a leader in utilizing artificial intelligence to automate high-volume customer interactions. Recognizing just how important digital transformation was for the success of his global clients, Umesh made the decision to move his headquarters from India to the United States last year and is growing the company very rapidly. He holds a series of patents in speech recognition and voice biometrics and is a globally recognized expert in the field of AI. Rajat Bhargava is a co-founder and CEO of JumpCloud. JumpCloud is a leader in the provision of flexible IT infrastructure, securely connecting and managing employees or devices and IT applications, enabling companies to adapt and flourish in a rapidly evolving business environment. Rajat is an 8-time entrepreneur in the cloud, security, networking, and IT sectors with 5 successful exits, including 2 IPOs. Rajat and Umesh are building complementary technology platforms for the future. Thank you again for joining us today, and I turn it over to Sarah to start the program, and I will rejoin later for the Q&A section.
Awesome. Thank you so much, Jamie. I am about to share my screen with you guys to give you a quick overview of our report and just high level quick introduction and hello to everybody. Jamie, first of all, thank you so much for having us. It's always a pleasure to collaborate with you. This report, Life in the Time of COVID, was done in collaboration with my US research peers across consumer and tech, but really taking a look in particular as my team led at digital disruption and what we're seeing as a result of the COVID pandemic. And so this report, I think, is really interesting if you follow through with me. I've been looking at software and either building, selling, trading, investing, or analyzing software companies for, as Jamie noted, 20 years. And what really struck me when COVID broke out was thinking back to Bill Gates' TED Talk he did, where he noted almost exactly 4 years to the day from the outbreak of the coronavirus, that if anything kills over 10 million people in the next few decades, it was likely to be a highly infectious virus rather than a war. And I think that these technology leaders have been thinking about how to prepare and enable the world for just such a pandemic with the shift to the cloud. And so we are living in extremely important times, and we're seeing incredible trends. You know, following a few weeks of earnings, we also have a lot more information in front of us after speaking with most of our companies. And I think it's very clear that COVID-19 has been an accelerator of digital transformation. We're seeing that really come across the board from every single major tech company out there. Mid and large size organizations, government bodies, and in general, companies have been forced, as they've moved their workforce into a remote situation, to deploy these incredible new digital tools. Microsoft actually noted 2 weeks ago that it had seen 2 years worth of digital transformation in just 2 months. So we really are seeing these incredible shifts to automatic ad buying, online gaming, and other really important strategic areas. Excuse me, I have to jump back onto my screen. Apologies. I hope you can still see that. Okay, wonderful. Sorry about that, everybody. A little technology glitch is part of the new work from home normal, and something we're increasingly dealing with. One of the things that we're also seeing incredible interest in is the massive $6.8 billion by 2023 collaboration tools market. And so what we've seen happen is a rush from companies like Microsoft with its Teams solution, Cisco WebEx, Zoom, Slack, you name it. Companies figuring out ways to enable collaboration tools amongst teams. But that's really at the forefront. There's also a tremendous amount that we'll talk about with Rajat involving what's going on the IT infrastructure side, which we believe is a large push to public cloud enablement, and also some of the major just general organizational shifts that have happened in the world at large. So one of those big organizational shifts is that everybody is essentially being pushed onto virtual private networks or directly accessing cloud data and cloud capabilities. We've seen people have to respond to this with massive bandwidth traffic constraints. And as a result, a lot of companies have had to split their VPN traffic, taking critical information and keeping it on their private network, but taking other information and letting it exit onto the public internet. This practice can be dangerous. And so one of the other things that we've seen is security companies have to respond to this much larger attack surface that exists today. Phishing emails around COVID are massively up. And with this wider attack surface, you're also seeing a need for stronger identity and access management tools and really strong protection at the endpoint as well. However, we also are seeing record rates of unemployment. And we've seen most of our software companies over the past few weeks come out and provide rough guidance around fiscal year 20, calling for something between a 3 and a 5 or 6% correction. This is what we're also hearing and seeing from major players in the market, like IDC and Gartner. In fact, last week, IDC came out and said that as opposed to their prior prediction calling for about 5% IT growth in 2020, instead it looks like now it's going to be down a little bit over 5%. And people are coming back and potentially speculating that there could be some further downside. Why is that the case? Well, Umesh and Rajat, I think, are going to be really helpful in illuminating what they're seeing in terms of their customer base, which spans the SMB and the enterprise as well. But we're seeing a lot of really, really dramatically shuttered and impacted industry verticals with significant spending exposure to both software and cloud in general. And we're also seeing a dramatic slowdown in the SMB segment as well, which we're really looking forward to digging into with both of these guys. But I think just one last point we came to at the end of this report, which I hope everybody on the line gets the opportunity to dig into and discover the history of viruses and all of these major technological innovations that are occurring, is that there are some things that we've learned from this pandemic about the environment in particular. And we calculate that if we were to allow employees to work who can, just those who can, work remotely 2 days a month, we would see a near 14% reduction, or the equivalent of 5 major US coal plants closed per year. that would go a long way in helping us meet the Paris Climate Accord agreements. And so with that as a backdrop, we hope people get an opportunity to really dig into this report, but we're particularly excited to open up the dialogue and really hear from our two industry leaders, Rajat from JumpCloud and Umesh joining us from Uniphore, and hear about what you're seeing in your markets in particular. So, why don't I start with you, Umesh, because you are innovating AI for high volume customer service interactions at your company. And I'd love to hear a little bit more about your go-to-market, your sales profile, and what you're seeing in the overall environment today.
Sarah, it's a pleasure to be with you this morning and with Jamie, Rajat, and everybody. I'm the founder CEO at Uniphore. Uniphore is an AI plus automation company in the customer service industry, fundamentally going after a $350 billion industry, which we all experience many times a week by way of calling call centers or chat apps with businesses. And this is one industry which has been growing at 9% CAGR. So it's a large opportunity which is growing. But in the era that we live, where artificial intelligence and automation have really matured in the last few years, there's an opportunity to rethink what call centers of the future would look like, what would be these customer interactions of the future, and that's the business Uniphore is in. Our customer profile is one that is global. We operate in 11 countries around the world, largely in Asia Pacific, all the way from Japan, Vietnam, Indonesia, Singapore, Philippines, India, and also the North America, US, which is from a single largest opportunity. US is the largest opportunity for us. Our customers are the high end of large enterprise. And that's really Fortune 5, Fortune 50, Fortune 100 type profile. And if you think about our go-to-market motion, it's S&P 500, but kind of taking a cut at Global 2000s. That's really the universe of customers that Uniphore comes across in our go-to-market motion. These happen to be enterprises who typically have from a few thousand to tens of thousand people employed in their call center around the world. And these enterprises for the last few years have been accelerating investment in digitization, automation, artificial intelligence to A, drive efficiency, B, improve customer experience, and C, just see contact centers as a profit opportunity rather than a cost opportunity. What we are seeing, especially in the last 8-9 weeks, and it's hard to believe that it's just 8-9 weeks. I mean, seems like we've been in this mode for a long time, but it's very recent. Is that fundamentally we are seeing, at least in our business, which provides automation, AI, digitization to call centers, we are seeing an acceleration of interest in by and large, right? But that's not a secular trend, and I'll paint some color on it. We saw this early by virtue of having businesses in Asia. Late January, we started seeing some of our customers in Asia beginning to say, let's connect, a quarter later, etc. And it's one thing when 1 or 2 customers do that, that's part of sales cycle. But when 6 or 7 customers in 2-3 countries started to do it, we knew that the trend was emerging. We had just seen the outbreak in Wuhan. We hadn't even seen it in other parts of Southeast Asia, let alone US. But we could see the trend. We were in Melbourne with my co-founder Ravi, John Chambers. Jamie had organized the Montgomery Summit in Melbourne in January. When we sat down and said, look, this is a trend. And John Chambers told me, this seems very similar to 2001 and 2008, where customers are the first indicator. They won't tell you what's wrong, but they start to delay orders. And so we engaged a consulting firm to carry out a study very quickly. And we said across the past downturn events, 9/11, 2008, SARS, MERS, so both health events as well as financial downturn events, we wanted to identify what took place in our industry, which is the customer service industry. And the surprising trend was both technology providers and customer service operators, the outsourcing companies, had in the last 4 events seen an increased growth rate, increased traffic, increased growth rate of business in those 4 years as compared to the years before and after. And so we knew that, the trend would be traffics are going to surge across call centers around the world, including industries which are going to get massively impacted, such as travel and hospitality, right? So even airlines, cruise ship industries have seen huge surge in traffic. What we have seen is, first in the US, there are sectors such as utilities, telecom, healthcare, insurance, and on the high tech side, if we take out the ride hailing and the home sharing businesses which deal with digital payment, businesses which deal with cloud, they're all seeing surge in traffic in their call centers, both for new business and for support. Now, these businesses are anticipating, like everybody else, and I'm sure like Rajat and I, that the coming quarters may or may not hold that trend. So while they're seeing the surge right now, they are accelerating investments in automation to have the right mix of human capital with AI work hand in hand, so that as the surge happens and maybe it doesn't sustain, maybe it does, they're investing in these sectors. Obviously, sectors such as travel, hospitality, ride hailing, these sectors are completely at a point where they're not going to invest in, at least multi-million-dollar deals for new technology. That's not going to happen. The decision makers are not ready to make that leap of faith. Banks and financial services, again, for the first time in any downturn event, are going into this crisis with tons of liquidity. And there's going to be just, business as usual type investments in automation, etc. In Asia, very interestingly, while this was the industry focus in Asia, I'll give you a country focus. Countries such as Singapore and Malaysia, for the last 8 weeks, have not engaged with us in any meaningful way, and whole countries, right? We have customers there, so it's lights on, no new business, no contract conversations, no top of the funnel addition. But Japan, Hong Kong, Philippines, Vietnam, Indonesia, these countries have surprised us. They've had very little disruption in terms of shelter in place or work from home. They've had weeks and not months. And even as they went in and came out, we've added opportunities at top of the funnel. So demand generation is continuing to happen. New contracts are being closed in this period. Existing customers have upped their business. So, Asia has been a very interesting that how some countries have risen up while some countries have taken the pause mode right now. In conclusion, the one area which has become very interesting for us, I had, and this is me sort of calling out my own lack of judgment or the right judgment, I had last year predicted that the offshoring business of customer service, where outsourcers, run call centers in Philippines and India, and I'd said that business is going to be tremendously challenged with technologies like ours, because the value proposition of, doing a low cost call center 20,000 miles away will be challenged by advent of technology which balances the cost equation onshore. We have actually seen offshoring and outsourcing become far more relevant than any of us had imagined, as enterprises in the US have seen surge in traffic. They haven't been able to, or they're not in a position to ramp up call center hiring just because economic dynamics. And also remember, call center workers themselves are working remote. So there's a big shift. A lot of that surge in traffic has been now moved to the outsourcing vendors. Now the outsourcing vendors, while they're picking up additional demand, those companies were never structured to see 100% year-on-year growth, right? So that's not an elasticity they are built with, because they are very people-intensive businesses. And so where is that gap being filled? It's automation and AI, right? So there's a surge in traffic, enterprises are taking some, outsourcers are taking a big share, but both of them are coming to technologies like Uniphore to keep that traffic going. So that's a trend. It's call centers, like every downturn, are seeing increased traffic. Automation and AI, especially for fence sitters, will no more be an option. This is the new normal. And we are, like everyone in our industry, are just right now hustling and scampering to step up to that opportunity.
Thank you, Mesh. That's a really fascinating and interesting overview, especially the geographical perspective. We're definitely fascinated in hearing and seeing how different parts of the world are responding and actually going back to work as work resumption is starting to resume. Rajat, I'd love to turn it over to you. So first of all, thank you so much for joining us. It's a pleasure to have the CEO and co-founder of JumpCloud with us today. Rajat, I would love if you could give us a similar overview to what JumpCloud is doing and enabling today with what we're seeing and believe to be a very large shift to public cloud usage, and a little bit about your go-to-market and customer base as well.
Sure. Well, it's a pleasure to be here. Thanks for having me. JumpCloud is the digital backbone of any organization. So think of JumpCloud as connecting users to their IT resources, enabling access to laptops, servers, applications, VPNs, file servers, etc. JumpCloud controls access to virtually all or any corporate IT assets. Outside of the physical network itself, we probably play arguably one of the most critical roles in an organization. Think of us as sort of the grand central station of how users connect to their IT resources, whatever they may be. Traditionally, this role was played by an on-prem piece of software. It was called a domain controller. It's existed in that form for about 20 years, believe it or not, and has largely been untouched. And so one of the reasons that this time is so interesting is that you've got a number of different sort of trends coming together. You have, with COVID happening, this shift to remote work. You've got cloud infrastructure, web applications, mobile, remote work, all those things coming together. And yet organizations need to figure out how to connect all those people to those IT resources that they need to do their jobs. So the pressure for IT administrators on businesses, on organizations to be able to keep work going is pretty high. And so basically, we envisioned that not necessarily something like this would happen, but we envisioned a different future when we started the business about 4 or 5 years ago. And the thought process was really that the world would become more heterogeneous. It would be more remote. It would be cloud focused, web applications. It would be a collection of different ways of working. It wouldn't be done at the physical office necessarily. All the resources wouldn't be in the physical office. And so we called that future basically the domainless enterprise. And it's sort of what we believe is what the future of business will end up being. So there is going to be a new normal of how we're going to work. And IT organizations around the world are going to have to enable that new work. And we think having the ability to connect a user to whatever it is they need, regardless of platform, vendor, location, any of those things is going to be critical. It's going to be a requirement in order for organizations to function with their IT organizations. So that's just a brief background on who we are. Our customer base is small to medium enterprises, think 50 users to 5,000 users. Our base is global. About 50% of our base is overseas. So whether that's in Asia or Europe or Central America, Latin America, South America. So really all over the world. And I would say that the things that we've seen in the last 8 weeks, 10 weeks has been that SMBs, of course, and SMEs have been hit pretty hard. So we've definitely seen people pull back. We've also seen a lot of our customers pull back on due to layoffs, so use less of our platform or churn. However, we've also seen a whole new set of organizations that were once on-prem or physically located on-prem and using on-prem solutions shift to the cloud instantaneously. So we've been able to accelerate in certain situations sales cycles very, very fast into a matter of a day or two, where they come in, they buy our product and platform, and they use that as a way to move to remote work. So you have sort of both sides of the equation going on right now. I would say that in our market, we are basically a product-led growth company. So our product leads the way. People come in and they self-serve with our product primarily. And so we're able to see a lot of the trends pretty quickly. We're able to see number of visitors. We're able to see number of trials. We're able to see how they're using the platform, whether they're accelerating through it or not. And so I hope that we're maybe a little bit of a leading indicator on how things are going, but it's tough to tell. But I'd say on balance, we've seen more positive than more negative, even in the SME sector. So, which was a little bit surprising to us because we had envisioned it would be probably more negative than positive.
Yeah, that's really, really interesting. Thank you for sharing that data point with us. It's certainly, with the companies that have larger exposure to the SME segment or SMBs, we are definitely hearing that it's obviously a little bit more difficult as those organizations don't have the same budgets or, capital preservation to necessarily do everything they want to get done. But one thing I wanted to pick both of your brains about was, as a result of this pandemic, especially with a number of the corporations we've spoken with over the past few weeks, some of our companies have actually flagged to us that their cost to acquire customer or their ability to even get in touch with customers has actually dramatically improved as a result of quarantine. And so the companies are saying, look, if I can remove a lot of the travel costs that I had embedded in my model previously for my sales representatives, if there's R&D staff that can actually work remote where I don't need facilities, they're finding and seeing ways to drive incremental savings. And so I'm very curious and interested to hear from you guys how your sales models, and now Rajat, I know you're primarily self-serve, so this is a really interesting contrast to Umesh, who deals with long, large, lengthy deal cycles. I'd love to hear about how your sales professionals are adapting to the change of and being quarantined and work from home. How much of that you think goes back to what it was prior to COVID and how much stays as it is now or some hybrid form of how it is today? And get a little bit of an understanding as to how you're operating in these kind of challenged times. Why don't we start with you, Umesh, and then we can move back to Rajat.
Yeah, so, at Uniphore, given the large enterprise focus, our sales cycles are, usually long. These are 9 to 10 month sales cycles, high touch, globally spread out sales teams, proximity to the customer. These are concepts that just how we designed our organization and we were scaling up. The one thing that has changed and changed for sure is there is no travel. That certainly cost has gone away, but also behaviorally, we are now an enterprise motion companies like us. There's this new concept that is field sales going to be more like inside sales at companies like Uniphore. And is that a permanent shift? I'm, personally not sure that it's a permanent shift, but it's certainly working right now. What hasn't changed, though, I will tell you that, Sarah, as well, is that the buyer cycle from the enterprise side is still the same. So from demand gen to doing demos to getting technology teams to do due diligence and then building ROI cases, and then finally long procurement process of contract, legal, security assessments, and vendor onboarding. Enterprises haven't changed any of those steps, right? So the time it takes to close these large deals, especially multi-million-dollar, multi-year deals, is still the same. We have also signed, our usual term of a deal is 3 years. We've constantly signed 3-year deals in this period. We've also signed 1 5-year deal in this period. So we haven't seen a shift or resistance to do shorter deals, or we're not getting committed. So, and I recognize that it's the segment of the market that we sell. But what's been fascinating is all of these steps are now happening over video calls. And the meeting the customer, the building the relationship with the customer, the dining with the customer, all those concepts are obviously paused. There is certainly a positive impact on cost of customer acquisition. Our marketing costs from large events is being shifted to right now virtual events and other demand gen focuses. We had to retool ourselves from the demand gen side for sure. Our demand gen machine was humming along when this hit, and we've had to retool, rethink how we outreach to new customers, what messaging do we take out to new customers. We experimented very quickly with Are there promotions? Are there ease of engagement that, okay, first quarter on us, implementation free, what works? We've retooled, we've readjusted, and I'd say our customers are reacting the same way. I am, reminded, I was watching Thomas Friedman's recent interview to a journalist in India, the author of The World is Flat. And he said the one thing he regrets saying in the last decade or so, and he said it multiple times, and he says he's now living to regret it, is every time he said the world will never be the same again. And he says every time I've said it, the human resiliency brings us back to the same place. We find a way to bring it back. So while we are seeing the shift, we are adjusting, we are doing everything on phone calls and video from a selling process and customer engagement. But this might be one that, this time next year, hopefully when the therapeutic, the vaccine is in place, the world is feeling better, that the enterprise motion goes back to being what it was. So, I'm very cautious about, is this a permanent shift or not, or how do we make permanent changes in our organization? What is true though, is we will think about expanding to new cities and new parts of the world very differently. Original thinking was, either get a shared office or a WeWork, or if it's a large concentration of people in a city, then we think about an office. That would change. We will rapidly go and start hiring people without worrying about offices first. So, work remote, work from home, that would, be more prevalent. But is field sales the new inside sales? I think yes, but I'm not sure if it's permanent.
Very, very helpful. Thank you so much for going over that. I think it's the biggest question that a lot of executives are asking themselves today. How much of this do we make permanent, and how much of this do we try to roll back over the next year or so? Rajat, I'd love to get your perspective on your self-serve go-to-market in the SMB segment, which I imagine has been extremely effective in today's environment, and how you're seeing customer purchasing, and if you're seeing any pivots there.
Yeah, it's a great question. And I think we can only speak from our perspective. So I don't have maybe a broader perspective on it than really the IT management tools and infrastructure space. But I think that the cost of customer acquisition for us really hasn't changed very much, because we were a much more self-serve go-to-market motion, SME focus, so freemium model. People come in and try our platform. They can try it for free. It's very easy. It's very quick. So the motion really hasn't changed for our customers at all. It hasn't changed for us. So I wouldn't say that there's any difference that we've seen. I would say that it has been harder for us to get a hold of IT admins. They're our primary customer. And when the shift to work from home happened, they were all hair on fire, trying to figure out how do they enable their organizations to work. And if they didn't have a way to do that, we got a hold of them really fast, or they got a hold of us really fast, and they were able to do that. In fact, a lot of people actually didn't even talk to us about, we saw a 30% increase month over month from February to March in self-serve purchases. So you can also buy through a salesperson at our company, but the vast majority of that shifted over to self-serve very quickly in sort of that February to March timeframe. And we've seen that continue pretty strongly. And it's a function of how busy they are. They don't have time to talk to salespeople. They don't have time to spend with you negotiating on things. So it's much easier for them to drop in a credit card and use the platform in a self-serve manner and consume what they need to consume. I think the more broad thing, as if I were an investor, that would be really interesting for me to think about at this point in time would be, what would be the right models to invest in the future? And I think the enterprise, at least from our perspective, the enterprise sales motion where you have feet on the street in the IT tools space, I think is going to be a tough one. I think my perspective is much more around self-serve, product-led growth motions where people can come in, try the product, and they're able to install it, use it very quickly and easily. And basically, they don't need the heavy sales motion. And I think we're seeing that probably in a variety of companies where that's working probably pretty well. So Atlassian and Datadog are two probably pretty good examples where they do have freemium self-serve motions that can work. There's probably many, many others. And so I think that's probably a pretty significant trend that I would pay attention to if I were an investor at this point in time, is, whether I wanted to invest in a company, regardless of the sector that they played in the IT tools space, let's say, whether they went enterprise or SMB, SME, mid-market, whatever it is. I do think a self-serve motion or a very frictionless approach to the go-to-market motion is what's going to win ultimately. And I think COVID's going to have a huge impact on that moving forward.
Really interesting. Thank you, Rajat. I wanted to follow up on something you mentioned quickly, and I'm only going to take another 5 or so minutes before we throw it open to some questions. I know there's a couple that have come across already that I'm sure Jamie sees more as well. But I wanted to discuss with you a little bit on the linearity you talked about, this rush in the middle of March, which makes perfect sense, of people rushing to deploy your solution in order to enable work from home. How has the linearity of business been behaving over the past several weeks? Or maybe you could look at it over an 8 to 10 week time horizon and give us a little bit of a comparison as to, just what you're seeing in terms of the trends of linearity. I think one of the bigger overarching concerns people have is, as we go back to work and as we start to reemerge as global economies, how lengthy and dramatic is the impact on the back half of the year, and even into 2021, how much we'll see impacts from this pandemic play out. So would love to get your perspective on that. Maybe we could start with you, Umesh.
Got you, Sarah. So, from my lens, the customer service industry has gone through a rough 8 to 9 weeks. And I say rough because, like I said in the beginning, we've seen a surge in traffic on an average 2.5 times more calls around the world than we saw year on year. There was a Gartner report which said that of the call center workers that work in the industry today, which stands at 14 million, and it said by 2025, about 30% of them would be remote. In the last 8 weeks, right now, we are at 85% remote around the world. So this was clearly one that the industry wasn't prepared for. There were basic hygiene issues. Call center workers in locations such as India, Philippines, and even US don't have sometimes the right infrastructure at home. In Asian countries, sometimes don't even have broadband or a laptop at home. So we know that some of our customers and partners have run armies to physically ship desktop machines from the offices to home locations of their workers, etc. But now that this shift has happened, and I've spoken to a lot of these CEOs in the last couple of months, the sense I get is anywhere between 30 to 65%, those are the answers I'm getting, is the population of call center workers that these CEOs believe will never return to a physical working location. Now that they made the hard shift and they've had to do it in a painfully short period of time, to your point of not just cost of acquisition of customers, cost of servicing customers is shifting dramatically. Enterprises are going to call center companies and saying, you no more have transportation cost of shuttling people from their home to the office. Your office cost is now gone. Pass on that cost benefit to me, and that's happening. And we both know what that means. It means that once a cost benefit is passed on, it can never be taken back, right? So in the call center industry, some of this shift is permanent. What that has also meant is new problems and therefore new solutions are being very rapidly looked at. There are new challenges to having your entire workforce in a call center environment being remote. How do you monitor calls anymore? How do you make sure compliance happens? How do you make PII and secure information available to people in unsecure locations, right? So tools such as RPA, automation, AI are all coming to fore. New solution categories would emerge, I'm pretty sure, in this arena. And so what we saw right from March to now, mid-May, we had in our 12-year history, the best month of March. March is our fiscal closing month. And we were racing towards the end of March when mid-March, shelter in place was announced in California. And I was anxious. But we had the best month of March in our 12-year history. We had record new bookings of enterprises. We almost saw a surge in some contracts being pulled forward from future quarters. We are very likely to see a similar trend in this quarter, April, May, June, and we are already seeing that. So clearly, to me, the short-term impact has been, this is a new world for us to run operations smoothly. We need the tools that we were sitting on the fence on. And the way I look at the next few quarters, probably even running up to middle of next year, is what I don't know is what I don't know, which is there a second wave? What happens in fall? Do we have a second lockdown? There's no way to model some of those events. And so that notwithstanding, I see some of the shifts in automation, digitization in customer service, which is, mind you, a $350 billion TAM, that is both permanent and accelerated.
Sarah, why don't I join in here with a couple questions from the audience. And some of them have come through on the Q&A, some have come through text to me. So one question, I'll direct it to Rajat. As private companies, you compete with Microsoft, and Umesh will compete with Accenture and IBM and others. How do you make the argument that in this environment it's safe to go with a private, quote, startup out of one of the large incumbents? And how much is that coming up in today's conversation?
Yeah, it definitely comes up. It's not a predominant question for us. We've been around for a little bit of time. We've got a number of customers. We've got a number of people that they know. A lot of these SMEs talk to each other and they know of each other. We've got some high growth, fast growing startups that everybody knows that around the world. So I think that question does come up occasionally. We've got a very strong balance sheet, so we can point to that. We've got a strong track record. We've got amazing investors. So it's the standard way, but we have not, that hasn't been an impediment. We haven't seen people generally say, oh, well, we're really worried about your stability, whether you're going to make it. And, we're going to go with Microsoft. In the end, our platform is a heterogeneous platform. So we enable people to work with AWS, instead of Azure, or Mac and Linux machines, or G Suite, or whatever other platforms they are. So in our world, it ends up being, well, if you're all Microsoft, you're probably going to go with all Microsoft solutions anyway. But if you're heterogeneous, Microsoft doesn't work for you very well. So we become, probably the default answer. And so even irrespective of financials, you're in a struggling position if you go with Microsoft and you have all this heterogeneous infrastructure. So that becomes sort of I'd say tertiary type.
How about a follow-up question on that then? So given the massive upheaval of business and organizations, governments, and large entities, are you finding it easier or harder to meet with decision makers? And as a startup, are you able to get access to that? Maybe I'll go with Umesh for a quick answer to that, and back to you.
This is a good back and forth that Rajat and I can do. We sell into the business side of the organization. We do not sell to IT. We don't sell to the CIO's part of the organization. It's chief operating officer, head of a business unit, head of customer service. And we've actually found that getting access to our customers, getting them available for a video call has become easier for us, because they're not traveling, they're not, they're not doing dinner meetings, etc. So my sense is that we've seen it easier, but I also recognize that post-sale, when we come to IT for execution and implementation, we see, it's harder to get IT folks on the table. But, Rajat, since you sell to IT, what are you seeing?
Yeah, I'd say if people have a problem right now, it's moving very fast. So that's the core. And I think it actually goes more to messaging and positioning of organizations than probably sales in our world. So if we can get our problem statement to resonate with that customer and our solution statement, then it's going to go quickly. If it doesn't resonate, then we're not going to talk to anybody. They don't have any time right now.
Okay, and another follow-up question regarding the pattern of work habits. There's been an increasing trend to remote work and public clouds, which are overburdening some of the networks. Sarah commented that on her introductory slides. what's being moved to the private hybrid cloud? What's staying on the public cloud? How's the pattern of workloads evolving in the new enterprise, and how do you see that playing out?
Yeah, I can take the first stab at that. So, I'd say broadly speaking, the corporate network is going to go away. So the concept of VPNing into a physical office where you get access to your confidential data or things like that, that's going to go away over time. That's going to become private cloud at AWS or Azure or GCP or wherever it is. I think the concept of having a central network where people go to and then sort of fan out from there, or even if they split it, as Sarah talked about, I don't think that's going to happen long term. That's a vestige of the past, and I think that's going to go away. That's the concept of a domainless enterprise, and I think that's what's going to happen here pretty quickly.
Sarah, any comment on that from your point of view?
Yeah, I mean, I absolutely agree. I mean, we've been seeing perimeter, I call it erosion or degradation around the core, IT network at the enterprise for years and years and years, but this has been nothing but a fuel additive or an accelerant onto that trend. And every organization, deals with shadow IT and, their employees accessing applications outside of the firewall. And it's become just an unmitigated disaster for large companies to balance. And so we do think that you are starting to, we do expect to start to see a world where that concept of the traditional perimeter just really goes away. And solutions like JumpCloud that can come in and effectively help people get where they need to go in the right secure and with the right, identity access it's just really critical.
I think
you're also seeing a surface area increase in terms of, the threat and the complexity of managing, and a whole new TAM of all. It seems like from your writing, Sarah, about cloud workloads as being a whole new TAM that hasn't been thought about for data management, security, access management, et cetera.
Absolutely. So, I mean, the more workloads that move into the cloud, the more of those traditional, in fact, I would even call them legal protocols, the things we are obligated as organizations to do, which is keep our customer data safe, keep our employee data safe, keep our intellectual property to ourselves. All of those critical things that we need to do, we have to consider doing in a domainless world. And how are we going to do that? We need these solutions. So it's just accelerating. And I think that COVID-19 has brought about just an organizational forced look at how to be a digital first enterprise.
So a couple other follow-up questions that are kind of correlated. The general one, Umesh, I'll let you start with this one, is what's the biggest challenge you face as a CEO in the current environment? Is it capital? Is it employee productivity? Is it deployment of the technology? How would you say, how have your major challenges changed as CEO?
So I would go with a couple right now, because there's a lot of things which are net new going on. One and this is unique to our situation. Our industry is not one that's seeing top line erosion. We're actually seeing a high growth this year. In fact, our growth projections have not changed, from pre-COVID to going into this year. And this is a high growth year for us. In a high growth year, you obviously have to keep the pedal on in terms of, investments and people hiring through the quarters. So what's challenging is to not have visibility for, 6 quarters out anymore, let alone, it's hard to plan what happens in Q3, Q4, what happens in the fall, is there a second wave? So while on the one side, it's the balance of, keep the growth on, keep the oxygen flowing into the stream, but at the same time, balance it out for a second black swan event if it were to happen. And it's that, give and take that's hard to, financially model on where do we invest, where do we stop,
Okay. So basically what you're saying, your planning horizon has come in. Now, Rajat, the same question. I mean, Rajat, you mentioned earlier self-serve is, kind of, increased from 30% to 50% during the crisis. you must be seeing kind of information from your market kind of daily if you're interacting with the DevOps community. How you know, is that a similar challenge to you, or you just have to adapt kind of in real time to what's going on? And if that's not your major challenge, what is?
Yeah, I'd say we have tremendous telemetry on the business. So in the SME space, we have a lot of transactions. We're selling self-serve. It's a lot of digital. So we have tremendous telemetry on number of visitors, what they do in the product, how they're doing it, how they expand, when they decrease, what actions they're taking, what precursors to those actions we see. So I'd say that hasn't been a challenge for us. I would say a challenge of this time is a little bit different. To me, it's much more about how do you have that human connection with people who are now working from home? They've got huge challenges personally and health-wise, all those things that we took a little bit for granted, that we weren't really a part of it or witness to, and now you are. So I think if I were an investor at this point in time, one of the things that sort of steps out to me as being really critical is there's going to be a separation between great management teams and, I'd say mediocre management teams. I think that change has probably been hard to see when the market is going really well and going up. But I think now management and clarity of management, making sure that you're doing a great job is, I think that's going to be the separator at a point here pretty soon.
So what would be an example of something that you've seen or tried or completed that you think has been particularly productive in that area?
Yeah, for us, I'd say the amount of communication now across our team is tremendous. So I send out an email to the whole team Sunday night on what happened the week before, what's going to happen this week. We do a company-wide meeting showcasing something that we're doing in a team or a group every Wednesday. So now you've got sort of Sunday night, Wednesday, and then Friday afternoon, end of day, we're doing almost a virtual happy hour where we're talking about, hey, what happened this week? How did it go? We're doing shout outs and, kind of morale building. So that wasn't happening before. We had a lot of touch points, but not 3 touch points a week with the entire company. And you're talking about hundreds of people getting together on Zoom calls every, multiple times a week. So I'd say that's something that's been particularly powerful for us.
Umesh, you have large operations in India as well as here in North America. What steps have you taken that are different in your management to navigate the current crisis, the kind of response to this question that was asked?
The principles are similar to what Rajat just said. Fundamentally, it's over communicating at this time than under, as leadership team being more visible than not. With those principles, we've stepped up. We do a global world all hands once a month, where Japan has to start at 6 a.m. in the morning and we go midnight our time, etc. So we do that one event once a month. We do local all hands more often. We do once a week happy hours in different locations. We do leadership sessions more often. My own staff meeting has gone from gone from bi-weekly to weekly, where we are getting in sync more often. Our HR leadership has been very proactive. We organized online meditation sessions and yoga sessions for our employees, and they appreciated that a lot. 2 weeks ago, I personally felt all of us, including me, we are all seeing stretched work hours where calls are starting early in the morning, they go late in the night because of global sync ups. So 2 weeks ago, I announced one of the Fridays as a day off for Mental Health Day. And that, just had a tremendous positive response from the team. So this is a time where teams need to step up communication, leadership team teams around the world need to get more visible. Everyone is anxious. People, on the front line in Asia and India and in the US are anxious. They're seeing layoffs around them. They want to know how we are doing. And it's just about going out there and being very factual.
Oh, that's great. Well, thank you for that answer. There was a number of questions around pickup and demand. And I think what you were both saying is that there has been an increased demand from the marketplace for your products. I just want to clarify that, for that question was asked several times. And then one question related to, customer success in this sort of environment. Are you finding that there's greater focus on upselling and cross-selling existing customers versus new customers? And is it a different sale now? Is it more you're selling the business proposition rather than the technology? I know we're almost out of time, Sarah. So
I know.
I'll ask that last question and turn it back to you for anything you want to add. So I don't know, Umesh, maybe we can give you give a 30-second, answer to that question, then we'll turn to Raja, and then we'll have Sarah wrap up with one final comment.
So let me give quick cliff notes. Is customer success more important now than ever? Yes. Is that replacing new sale for us? No. For us, new sale motion is as active as it was before. Customer success motion is increasingly active. There is renewal, upsell, all of those are important things, but also because in our sector we are seeing net new demand, which is just up for grabs, and there's an opportunity to almost step up to meet that demand. We are seeing both new demand as well as customer success motion being important.
Great. Rajat, do you want to have any comments on customer success or the kind of the marketing message for customers in this market?
Yeah, I mean, customer success is huge. Our net dollar retention over the course of about 3 years is about 300%. So basically an existing customer for us triples in the span of 3 years. So, we spend a tremendous amount of time on that. It's even gotten more important these days. And so, yeah, I can't stress it enough. An existing customer is gold right now, and spending time with them is incredibly critical.
Well, that's probably a great takeaway. Sarah, back to you. And thank you, Rajat, Umesh. Sarah, thanks.
Absolutely. I just wanted to thank you both, Rajat and Umesh, for joining us to have this really interesting conversation with your different, really, I think, helpful and important platforms for today's world, and really enabling and accelerating a digital transformation in the world. Jamie, it's always a pleasure. Thank you so much for having us and hosting us. I just want to say to the audience that I think we're all balancing, how do we invest in this environment today? We want to be exposed to companies that are making a digital future and enablement really part of their of how they plan to enroll in the future. And it's coming from private companies like JumpCloud. It's coming from the innovation that we're seeing from guys like Umesh in the call center world, and with AI and the growth of these tools. It's also in public markets. And so there's a lot of work for us to do to sort out where we want to put our dollars behind these major shifts. But I think it's fair to conclude this session by saying that some of these shifts have been absolutely accelerated and will likely remain so. So we do want to be there, and we look forward to having an ongoing dialogue with you, Jamie, and with your audience.
Well, Sarah, thank you. I look forward to welcoming you back to Santa Monica when we get through this pandemic, or maybe a little bit later in 2021. And Umesh and Raja, thank you for joining us. They're great cricket fans. We're going to go see the cricket sometime in 2022.
Absolutely.
Thank you very much. Thanks for having us.
All those who joined today, we thank you for your time and interest, and have a wonderful rest of the day. And we look forward to being in touch soon. Thank you again, Sarah.
Thank you. Thank you so much, everybody.
Bye-bye.
Thank you, Sarah, Jamie. Thanks.
Thank you. Thanks very much. Bye-bye. Thanks.